Look, let me start off with a proposition that Penny Wong has put a number of times, because I think it really does shape the way in which we think about this issue. Basically, the proposition is this. This generation has lost the opportunity to avoid climate change. What we have now is an opportunity to minimise the damage. That is, we have a chance to avoid climate change becoming dangerous climate change. Now, if you accept that as a proposition, then basically you're led to the situation that action is going to occur globally. In fact, while it's true there are real uncertainties about the exact timing of action in individual countries and the precise nature of action that individual countries may take, it is already clear that there is significant action underway. The Copenhagen Accord that came out of Copenhagen, notwithstanding that in Australia Copenhagen has been characterised as a failure, it is true that it didn't go as far as many people would have hoped, but it has actually made some quite practical steps forward. For the first time, we've got both developed and developing economies agreeing to try and limit temperature increase to 2 degrees or less, if we can do that. Second, we've got, for the first time ever, developed and developing economies agreeing that they both need to take action. So for the first time, we've got the US, we've got China, we've got India, we've got Brazil, we've got South Africa and the like, joining with Australia, with Japan, with the EU, with others, and saying, we're all in this together, we've all got to start to take action. And action is indeed what's happening. Since Copenhagen, we've had 124 countries associate themselves with the Copenhagen Accord, and 75 of those countries actually inscribe what actions they're going to take to reduce emissions in their own country. Now, for some of them, that is lowering emissions below their business as usual trajectory. That's the case for developing economies. And for developed economies, it's actually about lowering their emissions below what they are now. So whole of economy cuts. Now, the reason for saying that is because we've got this situation that countries have committed to action. It's not enough for us to avoid dangerous climate change, but it is very real concrete steps towards it, towards avoiding that. And the challenge for us now is how should countries act? What actual what actual policies will they pursue to deliver emissions abatement in their countries? And we face exactly the same choice here. We conceptually have a choice between a carbon price and regulation. Now, carbon price, emissions trading and a tax, I'll just talk about them as if they're the same thing at the moment. I actually agree with everything that Danny and Richard said on this, and particularly on the benefits of emissions trading vis-a-vis a tax. But conceptually, you can just think of it, market-based instruments or regulation. Any effort to achieve the targets that we have adopted bipartisanly in Australia that relies on regulation essentially requires bureaucratic prescience. You actually need me to know more about Marius Klopper's business or Cement Australia's business or Loy Yang Power Station's business than those people do. Now, that by itself is so patently unrealistic, it should give us all cause for pause when we come to think about regulation. The second thing that's important in thinking about regulation is just the sheer magnitude of the abatement task in front of us. It's critical when you think about the policy choice confronting Australia to understand the dynamics of our emissions profile. The government and the opposition have agreed to target reductions in emissions of 5% below 2000 levels by 2020, rising to 15%, or in the event the world takes stronger action, going as high as 25%. Now, lots of people look at that and say 5% is a very small cut. In actual fact, If we did nothing other than the policies we've already implemented today, our emissions by 2020 would be 121% of 2000 levels. So a 5% cut is actually going from 121 to 95, or 26 percentage points. A 25% cut is a 46 percentage point reduction. Put it another way, it's equivalent to reducing the emissions footprint of every one of you and every one of our fellow Australians by between 1/3 and 1/2 over the next 10 years. So these are incredibly ambitious targets. And those business as usual numbers that I mentioned, that 121% of 2000 levels by 2020, is after taking into effect the impact of things such as the renewable energy target. So the bottom line for us is, can we meet these bipartisan targets without a carbon price? In my mind, there is absolutely no chance we can do so. Now, I'm on the public record as that. That's not a new position. I reiterated that in the Senate last week. I think this is ultimately the challenge that Australia has to confront. Is it serious about delivering the emissions abatement targets? If it is, then it is inexorably driven to the need to have a market price. Then you're in the world of what market price, carbon tax or an emissions trading scheme. And as I said, I'm not going to go into it, but everything that Denny said, I'm absolutely totally in favour of. I mean, to me, the advantages of an emissions trading scheme are quite compelling. I might just stop there as an introductory comment. One of the things that I would like to do as we go through is to muse a little bit about why we haven't succeeded in Australia in convincing people of the need to introduce emissions trading. But I'll just say that as intro comments.
It's a tempting prospect, actually, Martin. I'm quite keen for you to really delve into that, but we'll wait. I think the answer to the question from you is, on its merits, it simply must be alive if we're going to achieve serious reductions in the Australian economy. It now just falls upon me to introduce Elaine as someone who has done, I think, some of the most fantastic analysis anywhere in terms of the impacts of carbon pricing on an economy anywhere. But I don't want to pump your tyres up too much, Elaine, but I'm a big fan. So, Elaine Pryor.
Well, thanks, Nick, and good afternoon, everybody. Yes, I'd just like to share with you some perspectives from the investment community on what carbon trading potentially means and what some of the policy decisions might mean. My role is in equities research, and our clients are the superannuation funds and equity fund managers who are tending to look at what climate change means from the perspective of their portfolios. First of all, within the investment community, as you might expect, there are a whole variety of different opinions and views. But one of the views is particularly some of the large superannuation funds who consider themselves to be long-term universal owners of a broad suite of investments across the Australian and international community. And some of those funds are taking the view that climate change is a threat to their long-term investment returns, and therefore they want the problem dealt with. So some of those funds are particularly active in international initiatives to try to push forward a price on carbon. Within the investment community as well, there are clean, green, clean tech funds who are looking for opportunities that arise from having a price on carbon, and therefore opportunities in finding solutions to reduce the carbon emissions. Within mainstream equities funds, a lot of fund managers at the moment really are judged on rather shorter term performance, maybe a few months up to 2 or 3 years. So those fund managers are primarily looking at what will the valuation impact of carbon trading particularly be on particular companies' share valuations, and therefore does that mean that they should buy or sell different shares? So that tends to be a much shorter term horizon, say, than some of the super funds. Within the investment community, some people really want action and want it as soon as possible, but of course, like in the broader community, there are also people who are really sort of dragging the chain on this and sort of head in the sand a bit, so a wide range. What I do find, though, is that there are more questions now that I'm being asked about, do you really believe in the science? So I think that's something that perhaps reflects some of the debate that we've seen in the media in Australia just in the last few months, more questioning than perhaps there was, say, a year or so ago. Within the analysis that I've done, I've looked at the impact of the proposed carbon pollution reduction scheme on specific companies that are listed on the Australian Stock Exchange. We would see companies that potentially are winners from this, for instance, in gas and renewable energy, and part of that comes from the renewable energy target. But what we have seen in the debate in Australia is a lot about the cost to industry. And potential job losses. And in a sense, one might imagine that if jobs are being lost, it's because industries are going to have a tough time, and one might expect that that would go in parallel with a lower value for the company's shares. But when we actually crunch the numbers based on the scheme design for the CPRS as it was proposed, and taking into account permit allocations to industry, really the conclusions that I came to was that for most industries the impact was maybe sort of 1 or 4% of company value, but not, really very significant impact on company value. And that would be looking at industries like cement, aluminium, steel, LNG, that sort of thing. So feeling that from the perspective of investors, people weren't really seeing a disaster looming, and certainly equities fund managers weren't going out and selling shares in heavy industry because they feared the impact of a carbon scheme. In fact, coming back to something that Denny said about, well, at the end of the day, it just becomes, one more price amongst a whole load of prices for industry. And in fact, equity fund managers would say, well, the way that the oil price or exchange rate can move overnight, that's going to have a bigger impact on company value than the minutiae of the impact of a carbon price. So that was putting things into context. We did, of course, hear a range of views on this discussion, but we weren't seeing a huge amount of information coming out that suggested that investors should be wildly worried about their shareholdings in individual companies. What we've now got is regulatory uncertainty. I believe you would have heard yesterday that it makes it difficult for people to decide what to do in terms of investing in power generation, and certainly for investors, for equity investors, it makes it harder for people to evaluate the merits of investing in gas versus investing in other sources of generation, for example. One of the groups that I'm involved with is the Australia-New Zealand Investor Group on Climate Change. And that group is recognising that the most effective way to give regulatory certainty is to implement a price on carbon, and that group would see that having a carbon trading scheme is the most effective way to get the emissions reductions to meet a target at lowest cost to the economy, and therefore at lowest cost to their overall investments. So within the investor community, that is seen as an appropriate way to deal with this issue by those that are engaged in the debate. But I can't pretend that everyone in the investor community has exactly the same view on things. There's obviously a wide range of different ideas about whether this should be tackled. But I think that if it is going to be tackled, if we are going to meet the targets, then to do it efficiently with the means that allows cuts to happen at lowest cost would be the way that certainly the larger superannuation funds would tend to see it as being most efficient.
Thank you very much, Elaine. And that was very clear indeed. Now, we've got some fantastic questions that have come from the computer screens and from the biros through the break. And they really sort of fall into two categories, quite broad and quite technical. And what I propose is that I do two questions from that process, one broad, one quite technical. And then I'm going to take some questions from you. And there's a microphone here and there's a microphone there. So through the time being now, and when we've responded to these two questions, then we'll go to the floor. We may well go back to some of the questions that have been on the screen and indeed been written. But the first question is broad. Denny and Richard, you can relax. I don't think that you should be asked to comment on answering Tim's question, which is we have a pending election, a protocol that will run out in 2012, and an IPCC report due in 2013-14. What do you think the future of emissions trading looks like in Australia? And Martin, perhaps now's the time for you to maybe reflect a little bit on what we've learnt in terms of the way in which the debate has been conducted up until now. So Martin.
Okay, thanks, Nick. I'll try and be brief, but I think we're hostage in this policy issue to people not understanding what a big number is. If I say to you that inflation next year is not going to be 2 to 3%, the Reserve Bank target range, but it's going to be 10 to 20%. Everybody here knows that's a big number, and everybody here knows, gosh, government better take action to do something about it. But who knows what a megatonne is? I mean, how do you conceptualise 1 million tonnes of CO2, or worse, of CO2 equivalent, because you're actually talking about things that have been converted to a metric? How many megatonnes are involved in a 5% reduction or a 25% reduction? Well, in actual fact, it's 140 megatonnes have to be taken out of the economy each and every year by 2020 on a 5% target, and 250 megatonnes or 250 million tonnes a year by 2020 on a 25% target. So because people don't understand, and it's not anybody's fault, it's because this is a new issue for us as a community, and we haven't had the 20 years of beginning to understand these concepts that we've had in the economic space because of the reforms we went through in the 80s and 90s. We find it very hard to actually understand what the target is and then what's required. So as a result, what we get is lots of solutions in search of problems. Prime example is the number of people, when I give speeches around the country, who tell me we can fix our problem if we simply put a solar panel on the roof of every house. Well, if we put a solar panel on the roof of every house in Australia, we would reduce our emissions by between 13 and 16 million tonnes a year by 2020. So we've only got another 125 to 235 million to go. And it would cost us around about $200 billion to do that. Or it would cost us almost 1/5 of 1 year's gross domestic product. That, once you start to think in those terms, you are driven back to the fact that you have to have broad-based, market-based instruments to deal with the problem. Policies that we've pursued in this country in the past to try and buy abatement, to engage in regulation, have had costs up to and over $400 a tonne for a tonne of abatement. The CPRS would have delivered a tonne of abatement for $25. Now, we can spend how many tonnes we want to abate times numbers up to $400, or we can actually have a broad-based, market-based instrument. I think one of the other things that's been a challenge for us here is that because this has been a debate, even though it's been going for 12 years, Senator Robert Hill, who was Environment Minister in the Howard government, Senator Hill was the one who first started design of an emissions trading scheme in Australia in 1998. Peter Costello took to Cabinet in 2003 a proposal for an emissions trading scheme, and it was only in December 2006 that John Howard asked a number of us to go off and design to set up the task group on emissions trading, and out of that came the proposal to him that Australia should not wait for the rest of the world before it began to act, and if Australia was going to act, then the thing to do was to adopt emissions trading. He accepted that. He took that into the 2007 election. So that's why I said, you know, we have bipartisan support today for the targets. For a while we had bipartisan support for the instruments. I don't want to go into the politics of it, but one of the challenges on the instrument issue, on the mechanism, has been that people have compared the fully articulated carbon pollution reduction scheme with all the issues that have to be flushed out to get something like this to work, with thought bubbles. So somebody's had a thought bubble and said, oh, well, if I was going to do an emissions trading scheme, I wouldn't do it on that basis, I'd do it on this basis. Never been thought of before, never done any work on it, but people have come to the debate late. They've come to the debate somewhat surprisingly as if everything that's gone before is irrelevant because they haven't personally participated in it. And so that sort of stock of knowledge that one would normally have in a public policy debate has in a sense been diminished. I think the third thing, well, I think those three things together actually mean that there's an absence of a sort of a coalescing of thought leadership around the issues. So I think it makes it very hard for the politicians to try and take this forward. And then when you add to that there has been a sustained campaign of denigration of the science, and by that I don't just mean climate science. If you have a look what's going on, this is an attack on the scientific methodology. So everything that's underpinned the sort of liberal renaissance of Western society, or what became Western society, that paradigm is now being attacked. So you put those things together, and I think it's actually a very, very complicated situation for any politician to be in. And I don't envy them. I don't envy them on either side of the debate how they find a way through this. But I think we face a Tina moment. As Margaret Thatcher said, there is no alternative. Well, there is, but do we really want to sit by and look at the consequences of not responding to climate change, what that'll mean for our children and our children's children? Most of us here won't have to deal with the really harsh consequences. Some of the younger people up the back will, but is that really what we should be leaving to our children? So I think that means that we've got actually a quite difficult debate in this country over the next couple of years, because the longer we wait, the harder it is going to be to hit the targets for which we currently have bipartisan support. So unless we've really moved into significant abatement in the first couple of years immediately after the end of the Kyoto period, it's going to be a very, very difficult task for us to meet those targets.
Thank you, Martin. Thank you for reminding me of Margaret Thatcher. I don't have my 1988 Royal Society quote, which I should have got, which is one way of indicating that this isn't just a basket-weaving left-wing issue, is that Margaret Thatcher made an incredibly cogent speech in 1988, well before it was the fashion, in relation to the climate problem. Elaine, did you just want to respond very quickly? I mean, if just a quick intervention following on from Martin in terms of, you know, what does the future look like from your perspective?
Yeah. Well, I agree with Martin that I think that if we're going to tackle the issue, then it has to be through a price on carbon. And I think that rather than try to pick particular technologies or particular winners or particular solutions, that it has to be something broad-based. If some new technological solution turns out to be the answer, then that would logically be an abatement solution under a carbon trading scheme anyway. So I don't see that one rules out any new innovation. I think that sometimes, well, we do hear the proposal that it should be a carbon tax instead of a carbon trading scheme. On the one hand, maybe that puts a simpler price mechanism on carbon, but then, as we've heard earlier, it doesn't guarantee an environmental solution. And the other thing is that a lot of the debate in Australia about the detail of the carbon pollution reduction scheme was really about the impact on industry that would have a high cost if they had to pay for all their carbon permits. So I think that one would have all the same challenges of scheme design under a fixed carbon price that one would under a carbon trading scheme anyway. I don't think that it would make it simpler in terms of dealing with our industry.
Thank you very much, Elaine. This is a question from Matthew Reddy. After this question, we'll be taking some questions from the floor. It's a question to Denny. There are a number of acronyms here, but I'm going to spell them out. So, given the Regional Greenhouse Gas Initiative, RGGI, which is in the US and an emissions trading system there, the EU ETS, the European Emissions Trading System, GGAS, the Greenhouse Gas Abatement Scheme in New South Wales, and other cap and trade schemes have limited sectoral coverage, namely power generation. How does the widening of the sectoral scope to include non-CO2 greenhouse gases open up new innovation in emissions trading, including the sector no-lose target, especially relevant for agriculture in the Australian context? Denny, do you feel capable of answering that rather long question?
Yes, I think there's a fundamental point about, I think, emission trading programs and cap and trade in particular, which is if you can't measure it, if you can't count it, you can't trade it. So a fundamental limit is you've got to be able to measure it. For that reason, we start off with emissions such as CO2 that we can measure. And I would point out that the European system, importantly, goes beyond electric utilities. And proposals in the United States, and we see in countries like Ireland as well, are extending the price out into transportation. The US proposals all are agreed it would also include natural gas, residences and everything by what is an upstream, excuse the technical jargon, but essentially would be a price put on the carbon content of those fuels. So it would be economy-wide. So I think we know how to do that. We know how to measure those. Agriculture, ultimately, if we think out of the long perspective that has to be dealt with in climate change, we certainly want to bring land use, forestry, agriculture into the scheme. And I suspect in Australia, like in the United States, the agricultural sector is very eager for all of this. But there is this problem. How do you measure the emissions? And how are you going to do that? That's the critical issue. It's a very important one that has to be dealt with over a longer term. That's not a reason not to do something with what we can measure now. That's what's being done.
Thank you, Denny. Does anybody else want to quickly comment on that? Richard?
Just very quickly, Nick, to say, I mean, Denny just said that, I mean, the ETS is not limited to the power sector. And the point that I was making earlier, that the ETS has been a story to some extent of learning by doing since 2005. And amongst other things, that's a story of adding steadily sectors which are regulated to the overall scheme, so that, I mean, for example, you know, apart from certain new industrial sectors from 2013 for phase 3, that aviation is going to be included in the European Emissions Trading Scheme from 2012. Now, politically, that's quite controversial, but there's a story, I think, there that of the Europeans learning from existing experiences, then having to do some very tough design, and nothing in a way is going to be tougher than actually trying to regulate airlines sort of flying in and out of Europe. But this is a story of continuing to add to those sectors which are covered by an emissions trading scheme, so that progressively it can cover sort of a greater proportion of overall emissions inside the region.
Thank you, Richard. We'll take a question from the microphone at the back, the gentleman there, if you could just say your name.
Brian Snape.
Thanks, Brian.
My question is to Martin. I heard Bob Brown on Radio National recently say that despite repeated requests, the Prime Minister has declined to meet with him since April last year. If that's correct, I find it absolutely surprising. I mean, what commitment does the government have to progressing with the carbon price? But my question is, why is it that we haven't adopted Ross Garnaut's recommendation that if Copenhagen should fail to reach a comprehensive agreement, that we should adopt an interim $25 a tonne carbon tax?
Well, look, obviously, as an apolitical public servant, I don't know why you're laughing. I obviously don't know what's been going on between the Prime Minister and Senator Brown. On the issue of why not adopt a $25 fixed carbon tax, to do it, we would still have to get all of this through the Senate. And the issue in the Senate does not appear to be about the design of the scheme. It's really about whether Australia chooses to take action via an emissions trading scheme or a carbon tax as against alternative forms, an alternative policy that the opposition has. So the government cannot get any legislation through without 7 additional votes. The Greens have 5 of those. There are 2 independents. I can't speculate about how people may or may not vote in particular circumstances, but the debate has not been about let's modify the CPRS and we'll do a Garneau-type proposal as an interim step. It's actually been about, no, we don't want to take action of this type at this stage. I'm sorry, I missed that. Okay, look, can I just respond to that? I don't know who the we in this case is, and as I said, I'm not buying into the politics of it. People who have opposed the CPRS from either side have done so for a range of different motivations. But this idea that somehow you've locked in the CPRS, I find surprising. There are a range of trigger mechanisms in the design of the scheme put there at the request of a range of different groups in the community, which actually allow for a review of industry assistance levels. So in the event that there was more rapid global action, there was the emergence of carbon prices or shadow carbon prices in other countries, there are triggers there that would allow the government at any time and a government at any time to review, and an obligatory review in, I think, 2014 to go back and have a look at whether or not those levels of support for industry should be removed or should be altered. So it really comes down to sensible choice. What's the cost of not beginning to act now as against the cost of at least starting to act, proving the world doesn't end, and then modifying things as you go along. Ultimately, these are things that good people all across the political spectrum are going to disagree on, and I'm a public servant. My job's to design these schemes and implement them.
Martin, thanks very much for your clarity and candour. We'll take a question here. We've got around about 12 minutes to go. I'd like to take another question from the floor. We have a woman there, but all the questions in plenary, they're not the only questions. We're lucky enough to have websites and Twitter feeds and everything else, so do get involved in the conversation. The questions that have not been heard in plenary but were actually put down on the screen or are here written down for me will also be on the website and responded to in debate. So I just want to keep this to time. We'll have a question here, and then we'll go to the answer, then a response, and the final word tonight will fall upon Tim, our curator. But if we could have a very clear question.
My name is Morris Alexander. Question for the public servant representative, Martin. I've been listening to the debates over the last 3 days, And I was particularly interested in yesterday when one of the questioners suggested that what might come from the audience was something out of the box. And during the 3 days I've been listening to the conversation, the box has very much been the constraints of our current economic rational system, which, as you mentioned, Tina, from Thatcher's time, really has only been in place, in this country anyway, since the time of Margaret Thatcher, 30 years ago, whatever it was. Now, I remember before that, in Victoria, we had a system under State Electricity Commission, and as I understand it, that was a semi-government organisation which was able to collect money from investors, as it were, and to spend that money, and established pretty well, I think, the Victorian energy system as it has remained virtually since then. So my question is, as someone who, could you be prepared to look outside the box and say, isn't a real answer to this for the federal government under its constitutional powers to operate through a government-owned facility such as the SEC and do all the capital expenditure to implement, say, the whole of the 25% renewable energy and not, as it seems more and more likely that private enterprise is not going to do it. They just don't do it. It's not profitable in the long run. So isn't that the greatest idea that you've heard in years?
I'm tempted to just throw to Martin and he'll say yes or no, but before I do so, it's incumbent upon me to say that this evening we have a session which is on greening capitalism with David Blood and others. And tomorrow evening here we've got Tim Jackson, who I think I've said before yesterday has written a terrific book called Prosperity Without Growth. So I think it might satisfy some of your need to question the parameters of the debate, but that's not me trying to defend Martin. Martin, your answer.
Thank you. And Morris, thank you for the question. With the Garneau review, there was town hall meetings all around Australia to discuss the issues with the community, to bring forth ideas. With the green paper from the design of the carbon pollution reduction scheme, there were invitations for submissions, there were consultations all over Australia. Now remember, the green paper, what we're doing is we're putting out ideas which culminated in the white paper. So we were genuinely very, very open and encouraging of ideas, of proposals about how we go forward. I suppose in the specifics of your question, why not have a government-owned body to deliver the 25% entirely through the electricity sector? I mean, I think it goes to the points that Danny and Richard were making. What we want is a broad-based response so that we can get the cheapest abatement wherever it is. There will be cheap abatement in, for example, the cement industry, in various other industries, which you would not want to preclude. Now, you might be very brave and have sufficient faith in me to make some of those calls. I know me better than you know me. I wouldn't do it. I wouldn't, if I were you, give me the judgment call to make. I would rather decentralise it to the markets and basically make sure that there are incentives there and there are penalties there that actually induce people in those markets to behave the way we want. The penalties go to the price you have to pay for every tonne of emissions that you abate, and the incentives go to the fact that if you can lower your emissions more cheaply than it costs you to buy a permit, then you've gained yourself a competitive advantage vis-a-vis someone else. So I'd rather pursue the innovation of 22 million Australians rather than put it in the hands of a bunch of public servants like me. But thanks for the vote of confidence.
Thanks very much, Martin. We've got another question from the floor, but I'd really like to do justice to the really rich questions that are sitting in front of me as well. So if we could be very direct and very quick, and a very clear question, preferably to one of the speakers, if you can do that. And then I want to take one more question and then over to our curator. Your name?
Jane Morton.
Thanks, Jane.
In Germany, they have an ETS and a feed-in tariff that covers both large-scale and small-scale renewables. I recently heard Franz Josef Fell speak from the German Parliament, and he displayed figures that show that the feed-in tariff costs substantially less and delivers substantially greater benefit. They already have 16% renewables and are heading for 100% somewhere between 2030 and 2050. If you accepted that we might need to make much larger cuts much sooner, would it change your view about what mechanism to use?
Martin, I think you have probably said enough, so I'm going to allow you to relax. And I'm going to throw that to Richard. Your take in relation to the relative merits of feed-in tariffs versus pricing. Are they complementary? Are they in conflict, etc.?
I think the view I would take, and I apologise in a way, this is existing orthodoxy to some extent, but it's just, you could argue it's more of a common sense approach, which is don't put all your eggs in one basket, so to speak, you know, in terms of how you're addressing this massive problem. And the approach that the Europeans have broadly taken, I accept that there are differences at a national level, and Germany's a good example where they have chosen to have the feed-in tariff system that you mentioned. Denmark's another example of that. You know, as a result, wind has done better in Denmark, solar has certainly done better in Germany. But going back to that point, which is that really, you know, if you're going to, you know, address, you know, the overall issue of how to make deeper, more ambitious cuts in your emissions, then you're going to need a range of policies to do that. You know, whether it's going to mean tougher targets in the first place, which may well lead to a higher carbon price in due course, whether you're going to incentivize your clean tech, your renewables industries more through a feed-in tariff approach, or whether you're going to look at ways which you can regulate as well, for example, energy efficiency in buildings, or how you're going to incentivize the development of cleaner transportation. You know, for example, you know, this is where you might introduce an environmental tax, which might impose, you know, a higher road tax on the higher polluting vehicles. You know, I think there's that range which you can adopt. So, you know, for me, it's not an either or. You know, what you've had examples in Europe is, you know, the broad policy approach, and also at national level of addressing through various ways.
I suppose I'd also say the term feed-in tariffs refers to what I would call generation tariffs as well. You're not actually getting paid for what you're feeding back into the grid. You're getting paid for absolutely everything that you generate off your roof. So you're getting quite a lot of money when you look at the way in which some of the feed-in tariffs that we have in Australia have currently been structured at state government level. They're not actually tailored to the abatement that you're achieving. Elaine, did you want to have a bit of a comment on that question quickly?
From an investor perspective, I certainly talk to a number of clients who would like to be investing in solutions to climate change, and effectively what people would like to see is not so much targeting a particular solution, but they want to see the regulatory certainty and the regulatory incentive so that they can build a business case for whatever the investment is. So I would agree with Richard that there's room for a range of approaches depending on whether one's trying to commercialise some particular large-scale renewable energy, or whether one's trying to incentivise some small-scale rooftop thing or whatever. But I think from an institutional investor's perspective, the key thing is to have that regulatory environment with some certainty so that a business case stacks up on a risk-reward basis, and then the professional funds will flow into you know, whatever that solution is.
We've got 3 minutes. I do just want to ask one final question, which I will only pose to Denny. I know somebody's just jumped up, but you're going to have to sit down because there's just going to be one final question from Alan Cuthbertson, which I'll direct at Denny. Then we've probably got 1.5 minutes, and then I'm going to throw to Tim, and then we'll finish the session. And the question to you, Denny, is implementing cap and trade systems have no long-term value unless we can allocate caps between countries. Is Australia's position of equal cuts for all defensible, and do we risk implementing cap and trade but never being able to allocate the total international cap to individual countries? It's a piercing question. Denny.
The challenging long-term issue is exactly what you would expect of low-income countries such as India or China, who were indeed talking of participating in such a system, with relatively rich countries. I think that's a difficult political issue. I think it can be done. I think the view that everyone should do equally, that name your country, but China or whatever low-income country you want to take, should make the same sort of cuts as Australia or the United States will never fly diplomatically. And I think we can take a great deal of encouragement in Europe from the package that was worked out, what will be in the third period. If you think the same requirements, let's say the same amount of allowances or the reductions implied by the allocation of auction rights to different countries are equal between England and Bulgaria, think again. They're quite different, and they've managed quite successfully to recognize that East European countries and generally low-income countries such as the Baltics, Romania, Bulgaria are treated much more liberally than the rich countries of the Netherlands, the UK, Germany, and so on. So these issues can be dealt with. They are being and have been dealt with in Europe, and they'll have to be dealt with on a global scale. Equal cuts will not do, but that raises the question, what is equal? And okay. Equal is equity, and so, this gets back to common but differentiated responsibilities. That's a fundamental concept in the UNF, the United Nations Framework Convention on Climate Change, which is a very accurate what's going to be required, but also very challenging as to how to implement.
Thank you very much, Denny. Just a very quick response from Martin to that question, and then I'm going to sit down and Tim's going to come up.
I agree entirely with Denny. I'm just puzzled by the premise of the question. It is not, it has never been the position of either this Australian government or any of its predecessors that there should be equal cuts to emissions globally. The position always has been, and it's reflected exactly in the submissions we put to Copenhagen, to the UNFCCC in the run-up to Copenhagen, is that countries such as Australia need to take action earlier than others. We need to take whole of economy cuts, and what we need from developing economies is to recognise that they need to be given capacity to grow, and that what we're asking them to do is to help the global situation by restraining the pace at which their emissions grow. That is, their role, their emissions are doing that. We want them to restrain that growth, and for the developed economies, we've got to do that. There is no other way that we can even begin to have a conversation globally around that. So I don't know what the cause of that, or what the premise of the question was, but it's actually not Australian government policy.
Martin, thank you very much. Conclusion and summary from Tim. Tim, if you could just make your way up here. But just to say, the questions that we haven't heard in plenary, they will all be on the website, as will videos of all of the Deakin sessions. Tim, if you could just make your way up.
Well, as curator, I've only got 2 regrets about this session. The first is that it wasn't held in the Australian Parliament before a full assembly of all of our politicians, ears wide open, Leader of the Opposition and Prime Minister in the front row. And secondly, that I hadn't made arrangements to make this compulsory viewing before the AFL Grand Final. If you don't watch this, you don't get to see the Grand Final. And the reason I say that is that large segments of our society here in Australia have drifted so far from reality that they would like to portray people like our panellists as vandals and wreckers of our economy. We have leading politicians, leading business figures, leading media figures, all suggesting that what our panellists endorse and have explained to us will destroy our economy. That is so far from reality, and it's something that only you can address. You're the lucky 400 who've been here to hear this extraordinary presentation by this panel. I just appeal to you to go out and use this information as vigorously as you can in coming months, because so much depends upon us getting this right. Thank you very much for our panel. Thank you for our moderator. Thank you for being here.